Let's bring in somebody who actually gets paid to help both smaller businesses and large businesses. Chairman and CEO, Global Chairman and CEO of EY Global, formerly known as Ernst & Young, Mark Weinberger. Good to see you, sir. You're at your Strategic Growth Forum in Palm Springs. I'm very interested to know right off the bat, is tax reform a huge topic right now among what everybody's discussing there?
Yeah, Liz, it is great to be out here in Palm Springs. Of course, it'd be better to be with you. I'll get to see you hopefully out in Davos again or somewhere soon, but it is great. We got a lot of people out here. Tax reform is clearly on people's minds. We have a whole panel tomorrow. It's oversubscribed. And people are trying to figure out, really, they read a lot in the newspapers. The process is ongoing. What's really happening? And you can get so caught up in all the details. You got to look at the big picture. Really, they're talking about coming up with a competitive corporate rate, coming up with an international tax system that won't lock out money overseas. It can be brought home to invest in creating wages and jobs and investment in productivity equipment, having a middle income tax cut, and then for small and middle-sized businesses also providing tax relief. And, there are differences between the House and Senate, as you just alluded to, but you focus on the big picture, they're going the same direction.
Well, okay, they're going in the same direction, but as we look at the brackets, we can then move through this one and see what the pass-through businesses, what their rate would be under both the Senate and House plan, along with the 20% rate for corporations. And you can see that there is a difference, and people are wondering why for, well, this is repatriation, so we can hold off on that for a second, but if we could get to the one that specifically says what the pass-throughs are paying, it's actually more than what the corporations would pay. You talk to both of these groups. You have huge businesses that are clients. They'll get 20%, but the pass-through in the House would have to pay 25%. In the Senate, it's above 30%. Do we need to get those numbers closer to the corporate rate of 20%?
So, Liz, yeah, we work with both. Of course, we're a big pass-through, obviously a big partnership. Bottom line is there are differences there, but remember, at a corporation, you have a double level of tax. You have the 20% corporate rate they're proposing, and then when you want to get your capital out of there, you have another 25% tax rate on top of that when you get paid a dividend. Pass-throughs only pay one level of tax, an individual rate, nothing else, which is why 95% of businesses, mostly small and middle, choose to be pass-throughs and not pay that double level of tax. So the rates have never been exactly the same and will not be exactly the same. Important to recognize here, both the corporate rate and the individual rates for the pass-throughs are going down under this bill. You have large businesses, you have the NFIB all supporting the direction of these bills. There'll be a lot of work between now and the end of this year when they look at the numbers and redo the distribution tables to see who gets what. Okay. That's all fixable with moderate tweaks here and there. Bottom line is, though, they're on a fast pace to get middle-income tax relief either through pass-throughs or individually and the corporate relief done. And there is obviously a lot of complexity in that.
There sure is. Well, there's one thing that isn't complex to people who are paying 39%, and that is carried interest. These are the so-called loophole for the rich people who get to take advantage of what is totally legal, but a 20% tax bracket going way back because of how their income is calculated. These are mostly private equity guys. You don't get your income like that, right?
No, we don't own income that way. But as you know, that's really the capital gains rate versus the ordinary income rate. And the complaint is that it's really more ordinary income than capital investment.
We were talking about tax reform, certainly, and we are waiting. Sarah Huckabee-Sanders, thank you for being patient here. I need you to finish your thought on carried interest here because, of course, there are a lot of wealthy people who are going to still pay 20%, while even more of us are going to lose our state and local tax deduction, et cetera. What are you hearing from businesses about that?
Yeah, there's a lot of people who want the carried interest provision addressed. And I do believe before this bill is becoming a law, there will be a provision in there dealing with carried interest. How it will be drafted, what will affect, I don't know. There's always going to be someone, you pointed out, Liz, at the beginning, the individual ratepayers saying that the corporates are getting too big of a break. Some of the corporates are saying other corporates are getting too big of a break because what people don't focus on, the net numbers in there. There's $1 trillion in tax cuts for individuals. $500 billion or so is attributable to corporates. A lot of people just look at the gross numbers. There's a lot of revenue raisers. You point out the state and local income tax deduction on individuals.
Yes.
There's the denial of interest for corporations. above at 30% of EBITDA. There is credits and deductions taken away from corporations in this bill to try and get it within that $1.5 trillion numbers. So there are winners and losers within the categories here. But people just need to stay focused on this is a significant tax cut that would grow wages and jobs across the country. And there will be bickering any tax bill, which is why it hasn't been done in over 30 years.
Couldn't agree more, Mark. But again, people are saying, at least some of them, hey, you know what? Okay, fine. I'll take a hit for the greater good down the line. It'll grow the economy. I can handle it. But they just also want to see the uber wealthy also, get to a little bit more fair of a tax bracket. You had mentioned the repatriation of offshore profits. There is an assumption that these companies will move these gigantic cash piles they have offshore back here at a much lower rate and start putting it to work here. Mark, the last time this happened during George Bush's presidency, where he had that one-time tax holiday for offshore profits, these companies, they did share buybacks, they raised their dividends, they also laid off employees, and they did not invest in capital expenditures. What are you hearing from your companies that they say they will do with their money if they can bring it back from overseas at a lower tax rate?
So it's a great point, Liz, and people point that out to what happened back when there was that tax holiday. This is completely different.
Why?
This is a permanent provision that would no longer tax overseas earnings on a go-forward basis to bring that $3 trillion back now, but also on a going-forward basis. You had people like Randall Stevenson from AT&T saying not only with that provision where it could bring cash back, but now that you're going to have accelerated depreciation and expensing, you're going to have a 20% corporate rate. It's cheaper for me to invest in productive capital that will create wages and jobs. I'm going to put $1 billion more immediately into the economy, and that's attributable to, as we all know, the corporate rate is passed through in some way to shareholders and to wage earners, and there's all differences of opinion how and where, but that does accrue to wage earners as well. So this is very different than back in 2008 or so when that happened last time.
You definitely clarified something for our viewers right now, and it's added value. Thank you very much, Mark. It would be completely different. There won't be this frantic panic to get it back and then put it where they felt not necessarily best for the employees. But if it's permanent, let's hope that we don't see job cuts in the wake of that. Mark Weinberger, I'm jealous. You've got those palm trees behind you. Must be nice.
I still would rather be with you, Liz.
Yeah, in New York where it's cloudy and there's trash right outside our doorway right now. Good to see you, Mark. We appreciate it. And I mean,
you too.
Piles of trash, and I'm smelling it right now.